Todd, he is the CEO and co-founder of Innovest Portfolio Solutions. Thanks so much for your time.
Thanks for having me.
So what is the state of the economy?
Well, actually, the economy's pretty good. We had GDP growth that was very strong in the second quarter. Expectations are that the third quarter GDP growth will be 3.5 or so. The fourth quarter, we were slowing down because of the government shutdown, for sure. But I think that what the stock market is telling us, with it being so strong, is that actually 26 is going to be pretty good.
Now, of course, the stock market fluctuates. It goes up and down. What are you anticipating for 2026?
Well, it's hard to make predictions over the short run. I think what we know is the market is a leading indicator to the economy. And I think the market is telling us that economic growth should be pretty good next year. But I think if you're an investor in equities, you should have a long-term perspective. Volatility is part of the game. And if we do have a correction, that's a great opportunity to rebalance portfolios, actually add to equities. But valuations right now in the stock market are very high. And taking some chips off the table might make some sense, but I think the key to being a good investor is being process-oriented, not trying to predict markets, and being diversified.
So moving from Wall Street to Main Street, consumer spending has been resilient, but debt levels, especially credit card and auto loans, are rising. How sustainable is consumer-driven growth for the rest of 2025? And do you foresee any stress points developing in 2026?
We're going to have a new Fed chairman, and I think that most believe that new Fed chairman will likely be focused on driving rates lower, and that should help the consumer. It's certainly going to help the housing market. And it's also going to help these companies that rely a lot on debt. Right now, with interest rates higher, it's a burden. And if you look at earnings have been strong, especially for big companies. But the more leverage a company has, the harder time they've had.
What are some of the biggest economic rewards and risks that could emerge in 2026?
Well, that's a good question. We, like I said earlier, believe that diversification is really important. We are actually leaning into infrastructure. We believe that that's an opportunity, diversified infrastructure, which perhaps takes advantage of some of the elements of this transitioning economy into AI and really energy. And then also real estate. Real estate has had a tougher time of it, and now might be a good time to be diversifying more into real estate, especially if we're in an environment where.
Todd, thank you so much.
Thank you.